Today is Monday, July 15th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Alan, starting with the financial markets this morning, we're hearing rumors that the Federal Reserve may become more accommodative this year. Is this likely?
Yes, it is. And in fact, this changed substantially as far as the outlook on Friday with the weaker than expected July Consumer Sentiment Index when that was reported. Even on Friday, there was some talk that the Fed could cut by 50 basis points at the September meeting, which seemed a little bit outlandish. I don't think that's going to be the case at all. But that was the talk. But now there is speculation that there's a 96% chance that at the September meeting that the Fed will be cutting by 25 basis points. But an additional 25 basis point cut is probably going to take place at the November 7th meeting. So that has been moved up from the December meeting. So there has been a shift forward as far as the timing for when the Fed will be cutting. Still looks like September, but the move up to the November meeting is very likely. And all of this precipitated by this very weak report that we had on Friday. So I'm very much in line and on board with one rate cut in September and another one in November.
Yeah, probably not big surprises there. And yes. Looking at the precious metals markets, what is your price outlook for both gold and silver futures?
Okay, so both gold and silver are likely to trade higher, with any gains, I think, to be led by the gold market, since the gold has more of a flight to quality influence. Silver will probably trade higher, but I think will lag behind, mainly because of the industrial component to the silver market. Prospects of lower interest rates are underlying supportive for both gold and silver. So I think the trend is higher for both precious metals. But once again, it should be the gold that leads the way. And I think we can see some new highs for the move in the gold market. And once again, gold should be the leader to the upside.
Lastly, Alan, what are the major economic reports that potentially could move the markets this week?
Okay, Tuesday, we'll have June retail sales guessed at down 0.2%. Wednesday, the Fed's beige book. And on Thursday, we will have June leading indicators anticipated to be down 0.3%.
Thank you, Alan. Let's turn to the agricultural markets. Mark, what were the biggest surprises from Friday's USDA reports?
Well, to me, two things really stood out. First off was just how aggressive the USDA was in raising overall corn usage. Feed usage was raised a total of 150 million bushels, a 75 million bushel increase to both marketing years, while exports were raised a total of 100 million bushels, 75 million higher on old crop, 25 million higher on new crop. As a result, U.S. ending stocks were below expectations for both marketing years. Going into the report, I thought pace analysis may support a modest 25 million bushel increase on exports. So I was a bit surprised by the aggressive 75 million bushel increase. Price action following the reports was disappointing, as we failed to see much response to the upside. So to me, the market's clearly bracing for higher production numbers, while demand will need to prove itself over the balance of the marketing year. The other surprise was a big increase in U.S. spring wheat production at 578 million bushels. It was well above the range of guesses, which is effectively 500 to 550 million. The average yield was a record at 53.1 bushels an acre, and that's about 4.5 or more than 10% above the previous record yield. Where wheat came in above expectations at 1.341 billion. However, that was very close to our estimate of 1.345. We have seen new contract lows in response to largely to the higher production and the buildup of stocks here in the U.S.
Mark, looking at the week ahead, what factors will drive prices?
Well, first off, we have crop conditions this afternoon. I suspect we'll see some modest improvement, 1% to 2% in good to excellent for both corn and soybeans. Again, to me, the markets are clearly discounting yields above the current USDA 181 in corn and 52 bushels an acre in beans. I think we'll likely see some acres come in a bit shy of these June forecasts, but it's going to be August before we start to see some prevented plant data incorporated into the U.S. balance sheets. Winter wheat harvest this afternoon is expected to come in about 3/4 of the way done. We get an NOPA crush here this morning. We're expecting to see a record amount of beans crushed by NOPA members in the month of June. Crush margins have rebounded pretty sharply here in recent weeks as bean oil and bean meal have held up better than soybean prices. And also be watching what price level do we need to get to in order to start stimulating this better export demand. New crop corn exports are sitting at the lowest levels in 5 years, while in beans we finally saw a little bit of exports booked by China. However, new crop bean sales are the lowest in decades.
Mark, the large speculators, are they still piling on the short side of the market?
They are, Kurt. Money managers, they've been net sellers in the ag space now for 6 consecutive weeks, extending their short position to over 580,000 contracts. That's the largest since May of 2019. To me, there's no surprise in the market. The CFTC did confirm a record large short position in corn at just over 353,000 contracts. A little bit surprising, they are now also sitting at a record short in beans at 173,000. Soybean meal is the only area where speculators are long in the ag space. Index funds have also been pretty aggressive sellers in the ag market here in the last net sellers now for 8 consecutive weeks, lowering their exposure in the ag space, the lowest level now in 6 months.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.